Okay, so now that we've learned all of the concepts, now we're going to apply them. Basically, the pairs I like to swing trade are USD-MX, also AUD-NCD, all of the gem pairs, all of the CHF pairs, all of the CAD pairs, well, just Euro and GBP, same for NCD and same for AUD. Basically, I only like trading the most liquid pairs in these cases, and for CHF and JPY, which are all correlated pretty much 99%, I basically prefer trading all of them and look for all of the concepts that I explained previously, like sig pair and relative strength. And for these two pairs, I can find also pretty explosive movements, as you can see. So basically, the things I like to focus on are the weekly, daily, and 1 hour charts. In the 1 hour, I like to use the combination of the EMAs, which basically are 10 EMA, 20 EMA, and why so? Well, I like to use it just to be as a visual in the case of we're in a pretty proper trend. I'll use them. But if we're not in a proper trend, such as in this case of this trade, which we're just ranging, and we have all of these fair value gaps, all of those fair value gaps, we also have this big displacement wick making one low, one high, possible another low, and we had on the weekly, we took the low, we closed pretty bullish, which that's why I was expecting more expansion higher. Basically, as you can see on the range, we touched, as I already taught you, from premium to discount. We touched that again this day on this session, on the Asian session, and we displaced higher. Okay, that's what we want to see. We want to see discount, boom, displacement, and now we will want to see continuation, making it a clear trend. If it doesn't evolve to a clear trend, we could be in a ranging market. Okay, but we have to see the closures of the candles of the daily and the closures of the candle of the weekly. If we see a weekly closure, which would be pretty nice to see a swing low form, this candle, big expansion, we could expect the next candle to be a up candle. I don't know if it's going to be explosive up candle, such as in these cases. I cannot predict the future, but I can predict that at least it will displace higher because of the swing low formation and because we closed above the previous candle's high. Okay, that's one of the things that I want you to learn. I want you to learn swing lows, swing high formations, what happens when those are formed. Also, what happens when we close above a previous candle low or previous candle high. Go into your charts, look for it, and you'll figure out why I took this trade and took all of the trades I'm going to show you right now. This trade, the GBP, okay, we have a big fair value gap. We trace to a premium. Right now we're inside of this fair value gap. Not really the best price action in our favor. However, the trend is still bearish, and weekly is still bearish in the sense we could expect some of this day to at least start making a candle lower. If we don't, it might be dangerous for us and we could be in a matter of price going for our stop, and probably we should go out. Okay, but since we closed below the previous candle low, we are expecting lower prices. As well, we formed an imbalance, we're expecting lower prices, and we form a swing high on the daily, we're expecting lower prices. As well, on the 1 hour, we're seeing that we're forming imbalances. So all of the price action is in our favor. Same for GBP AUD, we had a fair value gap formed where I put my entry. Price goes up, goes a little bit over, but then eventually goes lower. We're forming a fair value gap right here as well, and we're respecting it. That's what we want to see. Why I took this? Well, we took all of this liquidity, we closed below, and we have this low, which is at least most likely to be rand. and we will want to see how price reacts to that low. Okay, that's the reason behind fair value gap, liquidity, displacement, etc. Now I want you to only use these three. You will see your bias with the weekly. The daily will also give you liquidity, and the 1 hour will give you your structure. That's what I want you to focus. So weekly will be your bias in the sense if we close above a low, okay, we're expecting most likely next week to get at least a high, right? Which we do. Next, if we closed above that high, we're expecting at least next week's to close above it. So we will be looking for swing trades all over here. Okay, we can see price retraces to the fair value gap, and we are only looking for market structure here. As we see here, we do retrace to the market structure here. Then we go up and we start ranging around. Okay, we start ranging. We eventually come lower and we trade higher. What we'll be doing here is just waiting for this structure to be broken. But since we're in a ranging market, I will most likely avoid this one. Okay. Well, that's how you will be looking. You will be looking at your structure on the 1 hour, your daily liquidity, and your weekly bias. That's it. Weekly, daily, 1 hour. Get good at those three. You're good to go. Okay. 3 time frames. You're looking for liquidity, displacement, and structure. Simple as that, but you have to be a master into it. It's better to be a master in those three than going to all over the other things that I taught you. Or go and make yourself a master in the other things I taught you. Okay? That's it for this lesson.